Yesterday, President Donald Trump assured markets that the United States is not interested in a full-blown regional conflict in the Middle East and warned Iran about new sanctions. So, amid easing geopolitical tensions, traders are ready for risky bets, laying emphasis on macroeconomic data. This video calendar on Insta4X TV channel will tell you what reports are worthy of attention in the first half of the next trading week. On Monday, the pound-dollar pair is likely to continue its downtrend. The UK is due to release GDP data and a report on industrial production for November. Analysts share pessimistic forecast. Recently, the Bank of England governor unveiled the intention of cutting interest rates. Bearing in mind these plans, any signal of sluggish conditions in the British economy will be viewed by traders as an excuse to sell the pound sterling. So, if the negative forecast comes true, the pound-dollar pair will decline, heading for 1.29. On early Tuesday, the economic calendar contains a series of data on foreign trade in China, which is one of the largest export-reliant economies. China's trade balance is expected to widen its deficit in December. However, this news could discourage traders speculating on the Australian dollar. The thing is what exactly increased China's trade deficit. Analysts project growth of exports and a decrease of imports. Importantly, Australia is the key supplier of commodities to China's industry. Thus, shrinking commodity supplies to China could put pressure on the Australian dollar. Indeed, Australia has been fighting devastating bushfires which deal a blow to the national economy. The report of crucial importance next week is data on consumer inflation in the United States. Following a sharp climb to a one-year high in November, the December CPI is expected to edge down to 2% on a yearly basis. Such a correctional downtick will not scare off investors but encourage them to open long deals on the US dollar. The fact that headline inflation matches the 2% target level set by the central bank confirms stability of the US economy. Moreover, this could provide evidence to the Federal Reserve that the domestic economy is ready for a rate hike. A similar report on the UK inflation will pose a challenge to the pound sterling. On Wednesday, the Bureau of National Statistics will post a consumer price index for December. In the previous months, traders were braced for a CPI slowdown to 1.4%. However, the actual data was slightly better than expected. This time, the odds are that the negative forecast will prove true in metrics for December. Apart from the above set events, it would be a good idea to take notice of other important reports. On Monday, traders will get to know securities inflation data from Australia, the UK trade balance and the Bank of Canada's survey on the banking sector. On Tuesday, make sure you don't miss a batch of inflation data from the United States. On Wednesday, high volatility in the market will be triggered by data on industrial production and foreign trade for the Eurozone, as well as factory inflation data for the United States. You were watching Forex Traders Calendar on Insta4X TV channel with me, Kate Stichina. We wish you profitable deals.